Welcome guys, it's Marcel here again. Still in the same recording as the previous recap and the market breakdown, but we decided to have another recap video live. So what we are breaking down right now is the Euro US dollar. Yesterday I took 3 trades on Euro US dollar. I want to introduce these trades to you guys because these trades were really clean textbook plan following opportunities. So first of all, let's just start with the 4 hour time frame, 4 hour structure. What we had here is basically we had let me just extend these levels a little bit so it will be cleaner and will be more pleasing to your eye. So what we had here is a bullish structure. Obviously, price been mitigating 71 levels over 71 levels over 71 levels. What we had on the less recent leg of this structure is a sweep of liquidity. Price took out this internal liquidity with a sweeping wick from where it did a continuation break. So we could pull the protected range from this low point to the high point. Let me just put a protected emoji there because it will be much more pleasing for your eyes. Yeah, it's way too small key. Anyways, we had this protected range with the protected 71 level located here. What else we had was another range pulled from this bearish candle to the high point right here, where we could expect bullish confirmations on this level. What price did here is that it didn't print a single bullish confirmation on this new 71 level, and instead of creating a new confirmation, it decided to break the low of the range from a high point that had a nice order block, volume order block at the very top of this range. So what we have so far is a protected 71 level, protected range from low to bottom. From low to top right here with the 71 located here. What else we have is a broken Fibonacci range, bullish Fibonacci range, and a new freshly created bearish Fibonacci range right here. So basically this range broke the previous unprotected level and mitigated the protected level as well. So what I told you in the forecast is that if this level is getting confirmed, then we can take shorts into the break of this level and into the deeper region of this protected level. And if this level breaks, if price breaks about this one area, then you can look for longs targeting the zero level right here. So this was the simple 4 hour structure. The reason I'm saying simple is because you just simply play with possibilities, you simply play in between regions, you play in between levels, these areas. If one of these are getting confirmed, you take the trade. If one of these are getting broken, you take the trade because, yeah, why we can take this trade without a without the further 4 hour confirmation on a level like this, for example, is because we are coming from a protected 71 level. So a 4 hour 71 level mitigation has already happened. Therefore, if this level breaks to the upside on the bearish perspective, you don't have to wait for another 4 hour mitigation confirmation. You can just simply look for continuation trades leading up to the zero level. Simple logic, really simple 4 hour structure. Now take a look at the 15-minute structure. Let me just replay price back a little bit to this region here exactly and explain everything that has happened here. So, we have this 4 hour protected bullish level and we have this unprotected bearish level which initiated the break of this previous trading range on the 4 hour time frame. Mitigation of the 4 hour bullish level took place and then a strong rejection started. What we had here is that price mitigated this bearish level, and at the mitigation it printed the perfect entry setup because after the 71 level mitigation it created a little pullback, then it created equal taps, double taps right here, which got taken out by the following movement. After taking out the double taps right here, price did a market structure shift to the downside. We could pull a Fibonacci from high to low exactly like this, and there was an order block at the very top of this range that started the volume. Now the plan that I forecasted worked out because this bearish range got mitigated. Sweep, shift, volume, order block, Fibonacci range, everything is there, limit set. I took a loss on this one. Yeah, price immediately took me out with a stop loss, but this gave me a new opportunity, this gave me a new hope because, like I told you, if this range breaks to the upside, which just did, price just broke above this high point. So if this range breaks, which did, let me just quickly type it right here, then we can look for longs. And the perspective can be easily shifted. because of this bearish confirmation, this bearish market structure shift. If it wasn't a shift, because price failed the setup that initiated a shift, then this will be a sweep of liquidity that broke the high point and broke the 4-hour high point as well. So what we have as a shifted perspective is that price took out the liquidity of this low point. First, it took out the high, then it took out the low, then it continued to the upside. Basically, took out the mini accumulation range, top sweep, downside sweep, and then continuing to the upside. So what took place right here is that the price initiated a sweep of this low point from where it broke the high point of the 50-minute structure and it broke the 4-hour structural high point as well, with a really nice amount of volume getting started from this order block. So by the time price broke above the 4-hour high point here and started the pullback, I did pull out this Fibonacci range because this was a perfect continuation setup coming from this previous protected 71 bullish level. So this is a nice continuation setup that not just broke a 50-minute high point and initiated a 50-minute continuation, but it broke a 4-hour high point as well. If it can, just get the logic right here. If it can break a 4-hour high point, just imagine how strong it can be. A low point, a 50-minute low point that takes out a 4-hour high point. Most likely that level is going to hold, and most likely that level is going to hit TP at least, right? So this was the logic right here. What took place here is that after having this nice break, after having the nice sweep of liquidity, the 50-minute break, 4-hour break, price started to move to the upside even more and more and more, and left behind nice amount of liquidity. So there was a really nice amount of liquidity pool left behind for the trade, a really nice liquidity trend line like this, many mitigations and touches of this trend line. A nice pool of liquidity got built up for the 71 level, for the order block, for the volume, for everything. So what I did, obviously, I adjusted the I adjusted the Fibonacci up to this high point and adjusted the entry to this level, obviously. So the first entry got triggered. I was in the trade, it was running pretty nicely. I was targeting obviously the 4-hour high point somewhere up there. I'm not going to pull it out to that point because that wasn't the final TP I closed the trade at. So yeah, it took place. Mitigation right at London Open, it mitigated the entry and it did something else. It did something else, which was the sweep. Let me just show you guys that, yeah, this trade was not included in the Asian session. So the trade formed before the Asian session. Asian session was just accumulating. So what took place at the entry and the first mitigation of this trade is that, yeah, price took out all the liquidity pool and took out all the bottoms, all the liquidity from this region, and took out the previous low as well. Here was a high, here was a low, another high. This high took out this bottom with a sweeping wick because, yeah, there was a wick below, and from the next candle, from this wick, from this very big sweeping wick, price reversed the upside immediately without hesitating, leaving this one candle behind and then the next candle immediately reversing to the upside. This wasn't accumulating, this wasn't staying in one place after the sweep or the break. No, it immediately reversed to the upside and did a reversal. Then it decided to do another internal continuation or confirmation of this overall trading range because, yeah, price reconfirmed this trading range and not just broke the last recent high point right here, leaving a market structure shift behind. It broke the high point right here and right here as well. So what price did is that it mitigated the 71 level right there. Obviously, it shifted back the structure to bearish on this very bearish movement. But after mitigation and sweep, it shifted back the market structure to bullish on this movement. So what I did right here is that I pulled out the Fibonacci from low to high point right here. What I saw right here is that, yeah, there was a really nice order block at the entry region. Here is the order block exactly at the 71 level that started volume gap. There was a sweep of liquidity. There was a market structure shift on this level. So what I thought is that I'm going to enter back into this setup as a reconfirmation. I used half risk on this setup. I used half risk on this setup because obviously, like I told you in the plan, in the market structure, I'm sorry, video course, I'm only entering with half risk into continuation setups. And now the exiting plan, because yeah, both trades were running nicely in profit. How I exited from my positions is that here was an extreme order block. That was the very top of this overall bearish movement, extreme order block. What I told you in the markup, when I told you that I'm in the trades, I saw that some of you guys were eyeing with these trades as well, marked out in the EURUSD channel, sent basically the whole signal into the channel. So yeah, congratulations for spotting these setups. It was really nice calls, and congratulations for the trades. That's why I included in the markup that how I'm going to close out. I told you in the markup that if price is going to reject heavily on this level, then I'm going to close out. What I did right here is that basically from like 11:30 or midnight, I was looking at my chart, looking at these candles right here, waiting for some breakout, waiting for some continuation, waiting for some final sign of bullishness. But I stopped looking at the charts at around 1:30, 1:45, somewhere around these on these three candles. I stopped looking at my charts because I was that tired. 1:30 a.m. I couldn't stay up longer. I decided to close out both of the trades because double trades. Both of the trades were running in profit. I didn't really want to risk the trades for a break even when I already had 4K floating right there. So now the stop loss is not there. The stop loss is here. So I didn't want to risk 4K, $4,000 floating profit for a break even trade because yeah, the rule tells you to set it to break even when it heavily rejects on the extreme order block on the opposing side. But I didn't want to set it to break even. I want to realize some profit because September has not been the best trading month of my career. Even though August almost been the best trading month of my career. Anyways, I wanted to realize some profit. That's it. I saw the 4K. I wanted to go to sleep. I didn't want to look at the charts anymore. Realized 4K, booked 4K, and went to sleep. And basically, that's the history of these three trades. This is how I took all these trades. Basically, all the three trades were forecasted because this first short confirmation was forecasted when I told you to look for bearish confirmations on that 71 level. And this trade, I mean, the two bullish trades were forecasted as well when I told you to look for longs after price breaks the high point. All you had to do is to apply the 50-minute continuation entry model, and you had the trades for yourself. And yeah, once again, I saw that some of you guys sent the exact same trades into the EURUSD channel, so congratulations for spotting these setups. Wasn't volume too small? If you are referring to the second setup, then yeah, might be a little bit tiny volume there, not the best volume I have ever seen, but I wanted to try this setup because of the size of the candles, because of how big these candles were on the bullish perspective. Still, criteria-wise, the setup was correct because there was volume, but the main factor that convinced me to take in the trade was basically the size of the bullish candles. And now this is the trade breakdown. Hope you guys liked it. See you and cheers.